Hey everyone, welcome back to the channel. Today we're diving deep into Google stock and why I think it might be at or near a major turning point. I've been researching this extensively, and there are some fascinating developments that could dramatically impact Google's future. So let's get right into it. Google's been under pressure for a while now, down about 20% year to date in 2025, primarily due to concerns about AI disrupting their search business and the ongoing regulatory challenges they're facing. Just recently, testimony from Apple's Eddie Q revealed that Safari searches fell for the first time, suggesting that queries fielded by rivals like OpenAI and Anthropic are already starting to eat into Google's search traffic. This revelation triggered a massive sell-off, with Alphabet shares ending that week down nearly 7%, erasing a staggering $138 billion in market value. This matters a lot because search is Google's cash cow, making up over 56% of their total revenue, bringing in about $50.7 billion just in the first quarter of 2025. When you look at their total advertising revenue, which includes YouTube ads and Google Network, it accounts for 74.1% of total revenue, or $66.89 billion in Q1 alone. The fundamental question investors are wrestling with is whether Google will lose its primary profit engine as AI transforms how people find information online. According to the latest Statista data from March 2025, Google still has about 89.7% of worldwide market share for search engines, which is only slightly down from 92.9% in January 2023 when ChatGPT first launched. But there are early warning signs of disruption, with AI-native search alternatives like Perplexity showing impressive growth, up 243.74% year over year from April 2024 to March 2025. But here's where it gets interesting. Despite these concerns, Google is actually making solid progress in adapting to the AI revolution. Their AI Overviews feature has grown from 1 billion users in October 2024 to 1.5 billion monthly users today. According to Google's Chief Business Officer, Philipp Schindler, these AI-enhanced search results are monetizing at approximately the same rate as ads in traditional Google search, rather than cannibalizing revenue. This is a crucial data point suggesting Google can successfully transition its advertising model into the AI era. Google's also been aggressively investing in their AI capabilities, maintaining their ambitious $75 billion capital expenditure guidance for 2025, despite concerns about trade policies and tariffs. This shows real confidence in the return on these investments. Their AI strategy involves a phased approach, first implementing ads in AI overviews while developing subscription models for Gemini, then planning to introduce ads to Gemini in the future, which appears to be a methodical strategy to protect their core revenue stream. Looking at Google's current situation from a probability perspective, I see three main scenarios playing out. There's about a 60% chance of a positive outcome where regulatory remedies are limited to non-exclusive defaults and data sharing, trade negotiations improve, Fed rate cuts begin in July or September, and Google successfully integrates Gemini with Apple devices. In this scenario, we could see the stock hit 195 to 205 by August 2025, 220 to 230 by December, and potentially 250 to 270 by mid-2026. The neutral scenario, with about a 25% probability, would involve moderate regulatory changes, including default arrangements and some data sharing, partially successful trade negotiations, delayed Fed rate cuts, and a limited or delayed Apple-Gemini partnership. Even here, the stock could reach $170 to $180 by August, $185 to $200 by year-end, and $215 to $235 by mid-2026. The negative scenario, which I only give about a 15% chance, would involve severe regulatory remedies like forced Chrome divestiture, escalating trade tensions, inflation spikes delaying Fed cuts, and the Apple-Gemini partnership falling through. This could push the stock down to the 130 to 145 range by August, with a slow recovery to 150 to 165 by December and 175 to 190 by mid-2026. When we look at the regulatory timeline, August 2025 is really the key inflection point. That's when we expect the final remedies decision from the antitrust case, followed by the ad tech antitrust remedies trial beginning in September. The DOJ's proposed remedies include forcing Google to sell Chrome, ending exclusive agreements with device makers like Apple and Samsung, and requiring Google to license search results to competitors. They've emphasized that any remedy should be forward-looking and address AI products like Gemini. But here's an important perspective. Google has navigated regulatory challenges remarkably well in the past. During the 2013 FTC investigation and resolution, the stock climbed 27% in 6 months and 58% in 12 months after the case closed with no significant changes to Google's search business. Similarly, after the 2018 EU Android antitrust fine of 4.34 billion euros, the stock was up 17% a year later. Even after the DOJ filed its landmark search antitrust case in October 2020, the stock rallied 74% in the following 12 months. Interestingly, the insider trading patterns don't suggest panic either. Sundar Pichai's recent selling appears to be part of a regular pattern under a pre-established Rule 10b-5-1 trading plan adopted in December 2024. The $97 million he sold over the past 2 years represents just a small percentage of his overall holdings, estimated at over $545 million. On the macroeconomic front, there are some positive developments that could support Google's stock. Inflation has been decreasing, down to 2.4% in March 2025 from 2.8% in February. Core inflation, excluding food and energy, is at 2.8%, down from 3.1%. The Fed has maintained interest rates at 4.25 to 4.50% through May 2025, but there's a 55 to 60% probability of 2 to 3 rate cuts by the end of 2025, with the most likely timing for the first cut being September. You know, this kind of deep data analysis is exactly what we focus on in our trading community. If you're finding this breakdown valuable, you should check out our Discord, where we've built an incredible ecosystem of traders and investors who are navigating these complex markets together. We've got free channels like trading patterns, trading indicators, and a free trade floor where you can discuss ideas with other members. But what's really been game-changing for serious traders are our premium channels with real-time algorithmic alerts, unusual options, flow tracking, and even insider and politician trade monitoring. We've integrated AI tools that help identify patterns most humans would miss. I'll drop a link in the description if you want to join us. There's plenty of free resources to get started, and the premium features are there when you're ready to take your trading to the next level. The Trump administration's trade policies are another important factor. President Trump imposed sweeping tariffs on April 2, 2025, including a 10% baseline tariff on all imports and higher targeted tariffs on specific countries, with China now at 100 to 25%. But on April 9th, he announced a 90-day pause at the 10% level for most countries to allow for negotiations. The first deal was just concluded with the UK on May 8th, and there's about a 65 to 70% probability of more moderate final tariff outcomes as negotiations progress with 70-plus countries over the next few months. The potential Google-Apple partnership for Gemini is a huge opportunity. Google hopes to finalize this deal by mid-2025, potentially announcing it at Apple's WWDC in the week of June 9th. If successful, this would bring Gemini to nearly 2 billion Apple devices, with features likely debuting alongside the iPhone 17 in late 2025. This partnership would dramatically strengthen Google's position against Microsoft, which has embedded OpenAI's models across Windows. When comparing Google's competitive position in AI investments, it's interesting to note that Microsoft plans to spend $80 billion in fiscal year 2025, Amazon over $100 billion, and Meta between $64 to $72 billion, while Google has committed $75 billion. These massive investments across the industry show how seriously these tech giants are taking the AI revolution. From a valuation perspective, Google looks pretty attractive right now. They're trading at a PE ratio of about 18.4 times forward earnings, which is approximately 41% below their 10-year historical average. This suggests the market has already priced in significant regulatory risk. Meanwhile, their financial performance remains strong, with Q1 2025 consolidated revenues of $90.23 billion, up 12% year over year, and operating income up 20% to $31 billion, with a 33.9% margin. So, are we at the point of maximum pain for Google stock? I'd say we're very close. The stock has already absorbed 2 significant antitrust rulings, the initial round of global tariffs, insider selling by the CEO, and is now trading at historical valuation lows. While there could still be some volatility before the August decision, with potential for worse than expected inflation data as tariffs begin to impact prices or surprise AI announcements from competitors, the risk-reward profile is becoming increasingly favorable. I see a 65 to 70% probability that the story improves significantly from here, with several catalysts on the horizon: the August regulatory decision providing clarity, inflation continuing to trend downward, the Fed likely beginning rate cuts in Q3, the potential Apple partnership announcement, and Q2 earnings in late July likely demonstrating continued strong core business performance. For investors with a 6 to 12 month horizon, I think the current entry point offers a compelling opportunity. The downside appears limited to about 10 to 15% from current levels, while the upside potential is 15 to 20% by August and 25 to 30% by year end in the base case scenario. Our probability-weighted analysis suggests an August 2025 consensus target of $180 to $185, representing approximately 16 to 19% upside from current levels. Given these factors, a staggered entry strategy makes sense. Establish a moderate position before the August regulatory decision, be prepared to adjust based on the outcome, and monitor key metrics like progress in trade negotiations, monthly inflation reports,